Andrew Llewellyn, welcome to the REI Diamond Show. How are you today?
I'm great. Thanks for having me, Dan.
Yeah, for sure. Interesting topic, interesting asset class. I probably would label this maybe like commercial real estate slash short-term rental, which is intriguing, right? A lot of people are doing these, mountain house kind of short-term rentals. This is something new. But before we get into that topic, I have a question I guess earlier. Is it true that you were trying to open up some kind of bakery business or something of that nature?
That's some great research. We
Okay.
orig That's really good research. Originally, the building I'm in right now, we had purchased it for to be a wholesale bakery, and our city permitting council had other ideas for me, and in order to do the bakery, the cost shot up so much to the point where I was like, I don't think we can sell that many blueberry muffins to recoup that money. So, during the tour when I bought the building, a buddy of mine had said you should Airbnb the whole place, and I thought it was a joke. And turns out when I modeled it, we should Airbnb the whole place.
Yeah, that's pretty cool. So you didn't, what year was this? This was not all that long ago, right?
This was 2021.
Okay,
So
so
kind
for
of like still in that like, is the world gonna melt down COVID era? And I had two ice cream shops. We were running a food truck with that concept and a wholesale bakery out of the back of the ice cream shop. And we needed to move the wholesale bakery. And that's how we got to this property. And it kind of got into real estate by mistake.
so from a location stamping question, I guess. I'm in Chicago right now, and you are in
Louisville, Kentucky.
Louisville. Cool.
Yeah.
Which will be relevant to the rest of what we're going to cover here today. So, why the food trucks? Was that a business that was like a low barrier to entry? Was it family? This is kind of an interesting start we don't hear often on this show.
Yeah, yeah.
Yeah.
The food truck was the same. It was a mobile concept of what we were running in the ice cream shops, and the ice cream shop was our kind of our twist on it. Was we were doing the European Liège waffle that's like a yeasted dough with pearls of sugar in it, and I had the thought to add that product to the menu because you have one new product, one new piece of equipment, and you get a whole new menu. So we were doing ice cream on top of these waffles, and they were the same toppings as ice cream.
Mm.
And from a production standpoint, it was super simple to set ourselves apart from the competition.
And what is that cyclical? I mean, it's not hot year round in Louisville,
It
right?
is very cyclical. Yes. Yeah. It is.
So,
It's a warm weather business only.
yeah, is it still operating, or did you make the decision to close that down?
When the lease ran out, I
Yeah.
decided to close it down because we were doing so well with our short-term rentals.
Okay. Yeah, that's interesting.
And
Very
I mean, after COVID, they printed so much money. And the cost of, a 15, 16-year-old kid to scoop ice cream became absorbently expensive. Plus they had to take tips, and, the food costs just went crazy. And then all of a sudden, like, to make the right margin that we were making, we stopped being like a snack or a treat, and we were like a meal. People, like, we were having $40 checkout tickets for ice cream, and it just like that that doesn't fly. That's not sustainable.
Yeah, that's wild. So we have this hospitality food industry entry point into real estate. Um, Feels like it was more of a business than an investment. And I like to ask about investment philosophy. That would be like the set of rules or your thought process around investing. Do you have an investment strategy now at this point, like an investment philosophy? If so, what would that be like in a sentence?
Yeah. Our investment strategy today is to buy a building for what the dirt is worth. Something just unwanted that's been on the market for a while, with some potential and in a good location.
And then turn that around, do
Turn
construction.
that, yeah.
Okay.
I guess the most familiar term to people would be the Burr model. Run the Burr model on a commercial building, and turn it into hospitality.
Let's I'm gonna do a screen share and we'll continue
Yeah,
our convo here.
yeah.
And I believe this is your building. Is this the building you're in now?
That's the building I'm in now. I am in the basement of that building. Uh,
Okay.
yeah, and it's a great, like, I actually, about an hour ago, our guest for this weekend showed up. It's a bachelor party. We typically do a full property buyout on the weekend, and so about 25 guys showed up 3 hours early, before check-in time, and so I'm down here in the basement, doing this podcast, and yeah.
Very interesting. And here's the interesting thing. So for people who are listening and not watching, you can check this out at what is this? Swepson.
The best place to check us out is superstaysstr.com.
Okay, so you got that. This is the Swepson Guest House.
Yeah,
This is what, 10, 12,000 square feet. It's like a storefront with apartments above it. So those in
yeah,
Chicago and Philly kind of know the deal of what this is.
yeah.
But 5,000 square feet per floor, give or take, maybe if I had to
It's
guess.
uh it's about 3,300 a floor, 10,000 square feet total. And then we have apartments on every floor, including the storefront. We fogged that glass in, and put apartments there. It's pretty cool.
Yeah, it is cool. And it's really interesting loft style construction layout here. 42 guests, maybe, if you took the whole building. Is that right?
If you took the whole building and you really packed it in, we can do 42 to 50, depending on how tight you want to pack it. But 42 is a good place to stop.
But this is spread across four or five apartment units total? What's the layout in there?
Across 5 apartment units, two on the first floor, two on the second, and then this cool lofty space on the third floor. And that winds up being the hangout space.
Okay, so that's kind of the lofty spot. And then how many beds and baths per unit do you have in there?
Yeah, it's a mix between, we have one 4 bedroom unit, we have three 3 bedroom units, and one 2 bedroom unit. So it's a bit of a mix.
And then how many bathrooms per?
2 bathrooms per unit.
Okay. Yeah, and the details are important. I know you and I are looking at this, and you look at this every day because you're
Yeah.
literally working out there right now. But I think for people listening, I'm trying to help paint the picture of what we have here. So a 10,000 square foot, five apartment. I would call this five Class A apartments due to the
Hmm.
construction and the detail and design that we have here. And what my mind goes to is, okay, look, um, Airbnb is working right now. I'm sure it's always going to work. You're operating it, very closely. But as a backup plan, even for somebody who's going to make the loan on the property, co-invest, own the property long term, if you don't want to do the short-term rental thing at some point in the future, or if the short-term rental thing becomes not a fad, or people just migrated away from it for some reason, the backup plan is you rent this thing out as an apartment building, and you're basically like walking away with cash flow. Is that what you were
Yeah.
thinking here?
Yeah, when we decided to pivot from the bakery to this, it was like, okay, well, what's, plan B, C, and D if Airbnb doesn't work out? And plan B was, well, we've got 5 great apartments in this building in a growing neighborhood, and it should cover the note. Shouldn't, so if the Airbnb doesn't work out, and so luckily it's worked out well.
And one thing to highlight here, I have like a property I stay in the wintertime in Florida. I throw it on Airbnb and it's like it offsets some of my expenses. It's not like a cash flow machine and it's not a business I'm running. I don't self-manage it, so I'm like not tweaking all the knobs and trying to make it push, every last dollar, the way that you can when you're running the business. But it was good the first year, and then three or four or five, or I don't know how many more, popped all up in the same neighborhood, right? So one of the neighborhoods, they would allow it to happen. You could get short-term rental there. It was legal. Part of why I bought the house there, but then that's why everyone else followed suit and moved in. So our creative property, 3,800 square feet, with the slides for the kids and the built-in bunk beds, suddenly, the neighbor down the street's putting like outdoor basketball court, pickleball court, like they're going Disneyland with it. And there's a ton of competition, is what I'm
Yeah.
getting at. But one of the niches in short-term rentals that you have taken advantage of here is you can accommodate a small number of guests in one apartment unit, or the thing that is hard to replicate is somebody takes all 5 units and has the bachelor party, the wedding, the corporate event. Like,
Yeah.
I look at a property like this and I'm thinking to myself, it's like, hey, if I was going to have my family all together, we have a choice. We rent 6, 7 hotel rooms and it's like kind of odd and we're all eating down there in the public space, or we find an interesting place like this and we take the whole building over, and whether there's couples with kids or the grandparents or what have you, you have this very unique place that you've created with a lot of flexibility and a very high barrier to entry for someone else to come in here and compete with you.
E- Exactly. And with families, we find that they do like they can be together. There's enough space to gather, have a meal, hang out, be with one another. And then at the end of the night, as families do, you're like, I'm ready to get away. I want to go back to my unit. I want to go. I'm good. I've had 8 hours with you. That's good. I want to go watch TV by myself. So you can do that. And then, families with kids that come here, they love that the kids are contained, the backyard's fenced in, gated. They know where the kids are. The kids can run the whole building, and it's just a really great setup for families, large groups, corporate retreats. Where you can see all our kind of reasons that people stay with us up there, and um, it's a great place for everything. And then the high barriers to entry. There's not it is a big chunk of change to open one of these and then to find a lender that believes that you can operate at this scale. That's definitely a barrier to entry.
Let's run through what the numbers look like. I mean, what did this cost to buy? What did it cost to renovate? And maybe what is the high end of the rent if someone takes the whole building, and what's the low end of the rent? Because this thing obviously is probably seasonal and you're going to get more money at certain times a year than the other.
Yeah. So we bought this in a questionably up and coming area during COVID. So so it was a big bet. It wasn't for Airbnb like I talked about. So we were like, hey, I hope the neighborhood turns around. It'll be a great investment. We'll have a cool property. If the neighborhood turns around, if not, that's okay. We'll have a bakery. We'll make it work. And so we paid, I believe, $980,000 for this building, which was not much. And then we spent about another 400,000 to renovate the first floor and furnish the place
In one floor.
in one floor.
Okay.
So when the property was purchased, it was this cool lofty apartment on the third floor and then two long-term tenants on the second floor. And their leases came up and they didn't want to renew, and that was another reason to kind of push for this Airbnb project.
So did you also have to do some improvements on the other floors, or are they not quite like the other build out?
They required some kind of, I would put it in lipstick on a pig category, a little bit of paint, change a couple light fixtures, a couple bathroom vanities, but nothing like the first floor where we were putting in demising walls, plumbing. That was a complete gut and restart.
Okay. So all in basis here, maybe 1.6, 1.7, something like that?
1.5, one
Okay,
five, we're
one
all
five.
in. Yeah,
Nice.
yeah. So
And then what are the rents looking like, high and low seasonally
yeah, we're typically running about $2,000 a night. That's kind of our
for the
annual
whole?
for the whole property. Yep.
Okay.
And that works really well for us. Produces plenty of cash flow. and about 10 or 15 thousand dollars, and depending on the month, $10 to 15 thousand in free cash flow.
After the mortgage, the expenses, the whole
Yep.
thing.
Yep. So
Okay.
it's a
Yeah.
great deal.
Yeah, it's interesting. Were you able to refinance all of the cash out at the 1.5 basis?
We, we were.
Phenomenal.
Yeah. And when, I'll speak to that quickly. When we decided we're all of a sudden we were doing real estate instead of um, ice cream and food service. It became clear that I needed to take a couple of courses, and I found a couple online courses. I don't remember what they were, but kind of learned about cap rate and refinancing and NOI and got up to speed on everything. So by the time we had started construction, I had an idea of what the process needed to be and how to execute on that.
Um, you have the most accidental real estate beginning. And there's people who have kind of the accidental thing, but usually it's like, well, I read Rich Dad Poor Dad and I found out about rental houses and then I went out and did XYZ to get into real estate.
Yeah.
But you're like, oh, I was over here making these ice cream pies and
Yeah. Yeah. Yeah.
yeah, we couldn't do it, so we just decided that this would work, and then it did. And then on the website here, I'm just looking at it before I shut off the screen share. You got your newsletter sign up here.
Yep.
Keep in touch. That's good. It's good. If
Yep.
anyone wants to check that out. That site that I did look at here that I was doing the screen share on for anybody is swepsonguesthouse.com, SWEPSON,
Yep.
guesthouse.com. So you can check out those photos for yourself or check our video out on YouTube. So we have this first very interesting mini hotel slash experience slash oversized Airbnb asset class, right? It's like, I don't
Yeah.
know if it's like boutique hotel is how it fits. I mean, how would you define this in terms of you've watched a couple courses on commercial real estate, so clearly an expert by now. How would you define the asset
Yeah,
class?
it sits in no man's land. If you go talk to guys let's take the perspective of banks. If you go to a bank that loans on Airbnbs, they say no, it's a hotel and we don't do that. And if you go to banks that do hotels, they say walks like a duck, it's an Airbnb, we don't do that. So it's kind of in between, and the term that we've come up with is residential style boutique hotel. That's really the best way we've figured out how to clearly describe it to people, and be articulate with it.
Yeah, I'd probably agree. And you're pretty hands-on. You're in the basement and probably talk to those guests that are upstairs today, right?
That's my favorite part of the job is
Okay.
meeting the guests, finding out where they're from, finding out why they came to Louisville, giving them a tour of the property. That's probably
Okay.
the highlight.
Um, yeah, yeah, makes sense. So the investor stack, I imagine, I mean, were you independently wealthy and then you built this project because you had enough money to do it? What was kind of like, how did you get it done from the beginning? 980 grand to accidentally do a real estate deal. You're like, oh, it was a good deal. I'm like, almost $1 million.
Yeah,
That's a big swing.
it was a very big swing. I had had the ice cream shops, and so we were doing well with that. And I called my dad was my business partner in that. He was kind of silent off to the side, and I called him and let him. I was like, "Hey, this bakery thing is just we got to get this out of the back of the ice cream shop. We need a new space." And dad had been in business for a while, and he was like, "I'm tired of seeing you pay rent to somebody else." He was like, "Let's go find something to buy, and I'll help you." And then you can get it stabilized, and we can figure out the bank thing in a little bit. But I can't stand seeing you pay any more rent. So dad's tired of seeing us pay rent. A buddy of mine, he knows someone in his real estate office that owns this building, and she was trying to offload it quickly. So dad stepped in and said, "We'll deal with the banks later. I'll help you purchase it." And so dad purchased it, with me and with the idea that it would be a bakery. And so that was very helpful. And when we got to the Airbnb part, by the time we got there, I had taken the real estate courses and because it kind of felt, at the time it didn't feel so whimsical and like, oh, this is such an accident. It felt more like I've got $1 million problem on my hands.
Yeah, you sure did. Yeah.
Like
Hmm.
we've gotta dig in and we have to solve this, is really how it felt. So, kind of in that process and taking those courses, I understood then like, okay, well, if we do this, we add the value of the renovation, dad can get his money back out and we can move along. We can keep
Yeah, and
going.
these buildings are hard product to make work. So we're doing deals all over the country, probably 1,800 since 2020 and 1,000 plus before that. And anytime we get these mixed use storefront and apartment above them, it's a very, very limited buyer pool. The tenant pool is also limited.
Mhm.
You got to be in prime real estate location to get like Starbucks or some national tenant in there, and then suddenly the building looks like a no-brainer. 98% of this kind of product is not national tenant type locations, Class A location where you're going to be able to get that. So you're stuck dealing with, the local ice cream guy who leaves at the end of his lease,
Yep.
right? Like,
Yep. Yeah.
so the product doesn't have a lot of buyers, is viewed as highly risky. This storefront with a couple apartments above it. So yeah, I can imagine the fire lit under your ass as you were sitting there with this $1 million building and no more bakery plan. Did the neighborhood end up swinging up a little bit since then? What happened in the market there?
The neighborhood thankfully continues to grow. We've had a couple other entrepreneurs in the neighborhood come in. There's a guy in the neighborhood, and it's a QOZ. It's a qualified opportunity zone. So that's actually really helpful to bringing the neighborhood, getting it to rise up. And the city has been putting a lot of dollars and promotion behind getting people to come to the neighborhood and be entrepreneurs here. Across the street, two girls opened a fancy wine bar and a coffee shop, so that's been great. We've got carpet store next to us, and wedding shop, restaurants, brewery. So it just continues to grow and grow.
Yeah, and some of that, you were part of the trailblazing pioneer, and your dad's faith is admirable to take the step
Yeah.
in the direction as goes the case for a lot of real estate investors who take the plunge into these areas on the upswing. Cool. So I think we covered that case study pretty well in detail. Let's switch gears here a little bit. You had mentioned a new project. I think it might be called the T12. Maybe I'm
It
wrong.
is it is called A12.
A12. Okay.
Yeah.
Okay. Got it. Got it. So the A12 project is probably bigger than this. I couldn't find much info or photos online. So I have no screen share here, and you're going to have to paint the picture all on your own
Yeah.
using words.
Yep. We've been very purposeful about not having that out there just yet. We want to have a good launch with it. Trying to kind of tease it as much as we can. But the picture is we are 3 blocks away from Whiskey Row in downtown Louisville. This property that I currently sit in, just geographically, is about 2 or 3 miles away. So they're generally pretty close. They're about 5 minutes apart driving. But it is just in the prime bourbon tourism location that you want to be. It's 18,000 square feet of 1970s warehouse that was then converted to 1990s office space. And when I purchased that building, it had an adult daycare in the first floor that was on a month-to-month verbal lease at half the market rate, and an ACT, like kids, high school kids, test taking prep on the second floor, also on a month-to-month lease verbally. So
Luckily.
yes, yeah, yeah. And that property had been on the market for almost 500 days. and nobody wanted it. And I walked in and I was like, this is a huge problem. I don't know if I can take this one on. And and just out of curiosity, I called a real estate lawyer that I knew, and I was like, how much if I have to like go all the way and evict these guys? And he gave me the number, and I was like, well, that's not that bad. And like considering the size of the project that we would have to do. And so I was like, well, let's just try it out. And it's 18,000 square feet. We'll end up with 32 bedrooms down there, and we'll run essentially the same exact model that we run at the Swepson today of large groups that need a place to stay together and then want some really cool hangout space to be able to actually gather, not in a public hotel lobby.
Yeah, true enough. So those 32 bedrooms, will that be laid out in 10 units or something like that? What would that look like?
Yeah, that'll be laid out in eight four-bedroom units,
Okay,
and
very
then
logical.
two kind of annex units in the basement.
Yeah, it's just so great because, even from a retirement perspective, in commercial real estate, we deal a lot with owners of businesses that are, I don't know, 75, 80, 85, and they're still running their business. And a lot of times it's, we have an offer in on like a 9,000 square foot warehouse now as we speak. And the guy's like closing down this like odd, niche little like um, stamping business. Well, the exit on that is not very liquid. We have to take risk. It's the same thing you're dealing with. We have to get it at a good price. And there's not a lot of buyers out there. Sure, there's some buyers out there. And I liken this to Swepson House. Had you bought it and run the bakery in there and then ran that until you were 75 years old, you turn around and sell it, and you're selling this odd mixed use thing with the storefronts. That's not a lot of buyers out there.
Yeah.
Not a lot of great exit out there. Whereas the model that you have, you can run this for, assuming the market holds up for, 10, 20, 30, 40, 50 years, however long. And then if a day comes and you want to retire, you have a probably highly liquid asset in a logically built out with large units apartment building. So like barring, big negative population growth or something like that, the apartments are like, aside from single family houses, apartment buildings are the most liquid asset that I've dealt in out of all the asset classes,
Hmm.
right? It's simple, the banks know it, it's easy for people to understand, and it's like the house they or apartment they lived in so they can relate to it, and you just have a huge buyer pool compared to many other businesses running in their owner operated locations that then have to exit their unique, not so liquid, hard to figure out kind of property, which is exactly what you bought here in 18,000 square feet of office space in today's environment, right?
Yeah, yeah, and the people we bought it from, it was they're kind of a legacy family in Louisville. They have plenty of money, and the brother-in-law was like tasked with managing these tenants, and he was like, "Well, I have a family office that I operate. This is really a thorn in my side." And we offered him just around $50 a square foot for it, and above ground. So we pay that was I guess above
900.
ground we're like 11,800.
Okay.
So we paid like 1.18 million for it. I mean, like nothing. Like, and it's got 25 parking spots in the downtown, in the central business district.
Oh, wow. You even have a lot there, huh? Parking
Yeah.
lot.
Yeah. So we just again we looked at it, we're like, what would somebody pay for this lot? That's probably what we'll pay for it. And then we, picked up the headache of the tenants.
And that project, if I had to guess, is probably going to run somewhere around 1.2 to 1.5 million to build
Yeah.
out.
Yeah.
Yeah.
Yeah. A little bit more, just
Okay.
with the furniture and the plumbing.
Yeah, okay, it makes sense. Yeah.
The
Because it's like
plumbing.
what? It's wide open lofts right now. There's all framing,
Um,
everything.
well, today it is completely gutted. It's just four walls, white boxed, essentially. I've had guys in there for a month gutting the 90s office space.
Yeah, what a great asset though. Once it's all done, it's all modern plumbing. It's the newest wiring with brand new insulation wrapped around it. So you just have, probably 100 years of usable life out of what goes in there, not this like endless Some of my old apartment buildings I got rid of, it was like the cloth wiring and like
Yeah,
pipes were
yeah.
leaking. It's just like a never-ending repair pit. So this is a great example of office building adaptive reuse, or um, the mixed use kind of a thing. It's really tough, and it's a cool way to um, reuse that space.
Hmm.
I guess this would work in some areas of like Chicago, but it doesn't work everywhere, right? So if the listener's listening and they know of some building and they wanted to duplicate the strategy in another city, what are a handful of things they would look for and say, yeah, it would work in this location, this neighborhood? What are the things that kind of drive this event, large group gathering event space that you're running?
Yeah, so here's the first thing I would look at. Can you run a residential hotel, boutique hotel kind of thing that we're doing here? Can you run that in a commercial building? Now, I know you can go down to Atlanta. No chance you'll be able to do that down there. You're gonna have to get rezoned, that whole process. And so it's out. We're just have kind of, I wouldn't say we have lax zoning laws, but they're not as strict as some places. So can you do it is the first question with the zoning. And then the second question is, do you have the neighborhood surrounding you to support it? Um, every time you go to a hotel, you've got a coffee shop, you've got a place to get breakfast, it's got a gym and a workout room. Does the neighborhood have those amenities that you're not going to put in the building? Because you don't want to end up on basically an island by yourself.
What about demand in the area, right? So, we can't have this in a high crime area in the area of town where things just don't work. We have the coffee shop, we have the gym, maybe we even have a bunch of restaurants around there. But are there like things, in Louisville, you guys have what? Kentucky Derby, you got this like bourbon culture kind of
Yep.
thing going,
Yep.
right?
We do. We've got Kentucky Derby. I mean, Louisville. I always tell people Louisville Tourism, the organization that, promotes tourism and gets events to come to Louisville, the whole city is riding on their back. We've got Kentucky Derby. We've got two giant music festivals that 2 weekends in a row they attracted over 100,000 people back-to-back weekends. So that's huge for a city like Louisville that is 1 million people total. And then we have one of the larger convention centers and a tertiary market, and then also we have a giant fairgrounds. So I mean, they just keep those things booked, and we'll do like really obscure events just year round. Farm and Machinery Show, the electric, those, like the power company, they've got those trucks with the buckets. Like they'll have that convention. Yeah, it's just like we have Rabbit Breeders of America convention here. It's just,
I know
it's
a guy who used to attend that.
yeah, yeah, it's just obscure event after obscure event that are bringing tens of thousands of people to Louisville. And then here's the last piece that drives traffic for us specifically. Louisville is fairly easy to get to because it is central to the United States. So there's a lot of remote teams out there that are trying to find a place to get together. And we're finding corporate retreats that need to get people from all around the US together in one place. And Louisville is central on the map.
Yeah, so you got to be in a location where you could potentially have a corporate retreat. Ideally, you have some tourism functions there, maybe sports teams.
Hmm.
Kentucky Derby you guys have, but those same tourism things are going to sort of be part of the draw for things like bachelor parties and
Yeah.
bachelorette parties, and family reunions probably even need some semblance of a tourism draw.
Yeah.
You don't want to be like out in the middle of a small town America where there's no population, no airport, barely a highway exit. This is obviously not going to work there. And there's probably a spectrum of rural, zero, net zero, near zero population, near zero traffic to New York City or downtown Chicago. And then a little further back on that's maybe the Louisville market. And somewhere up at that other end of that population, that tourism thing, this strategy works, and it'll be left to the eye of the beholder to figure out where that is.
Yeah, I recently did just a small case study with a mentor of mine, And he said, "Well, why don't you go to Nashville next? Because they basically have these. It's bachelorette, it's the bachelorette version of Las Vegas on the East Coast, and plenty of traffic. You can get it to work." Well, we looked at it. The problem is the real estate costs twice as much there, and there's so many investors there that the rental rate is half. So the math just doesn't work on paper. So it's
Yeah,
like,
it's interesting.
yeah. So you have to find that like right balance for the market and
I-
the aging on the market too.
Is there a strategy for underwriting the rent? Like, how did you determine that Nashville was a pass and that the rates were half of what you're getting where you're at?
They have a lot of, I would call it like class B, class C inventory of large units. So there's guys down there building like zero lot line houses and multi-story condos, and just to basically do large group stays.
Got it.
And they're not
Got it.
like they're not
Yep.
unique and they're just kind of like commodity type things. But when there's that much commodity in the market, now you're just
Yeah,
competing
how the
on
hell are you going to
price.
stand out, right?
Yeah.
Like, why
Yeah, we're
go where
cool
it's
and
going
we're three times the price, but
to
you're
Yeah,
not three times the price cool to the commodity guy.
that's right. And a lot of them are going to be commodity guys, when it boils down to the end. That's part of the issue I've always had with the short-term rentals. I was kind of bullish on it when I bought my own vacation house in Florida. I'm like, oh man, this is great. The projections look great. Year one was great. That was probably 2023 or something, if I had to guess.
Hmm.
And then like the bubble popped, it seemed like, all that printed money that you were talking about earlier has cycled its way back through to its rightful owners, I guess.
Yeah. The government.
Yeah, government, and, probably those who figured out the game of money who are listening to this show. Certainly all of us have some of that in our pockets and net worths here at this point. But yeah, it's that competition kind of a thing, right? It's like, Airbnb, what, 15 years ago or whenever it first came out, you could put these like somewhat dated, places to stay and people would do that. Well, you couldn't really get away with that. And I remember 2017, 2018, I had an Airbnb and mine was like the dated apartment unit and it booked it, did okay. It was in a decent enough neighborhood that was trending up, probably similar to where your project is located translated into the city of Chicago.
Hmm.
Um, but then, everyone else was competing me away and they were just having renovated units. They weren't even cool, but they were like fresh renovation. And then what happened in Florida, we were kind of on the front end of the design and coolness with my property. And then that got trumped, exponentially two, three more times by the next units that came on. So you got a good thing going. I don't know how duplicable it would be, and I'd probably caution the listener to make sure you've really dialed in the business model and testing the market and all of your assumptions before you pull the trigger on a $980,000
Yeah.
purchase for the
Yeah.
asset no one else wants, right?
Yeah, 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 exactly. Exactly. I mean, we were lucky to have the first floor and the at the time the second floor, we were getting a little bit of cash flow from there and it was covering the interest. So that,
Nice.
that worked. Um,
Yeah, it sounded like, perfect deal, especially for deal number one here. So we have A12 cooking being developed right now. I mean, what's the future looking like for you? What is the goal? I don't know, 12 months, 18, 24, 5 years. What kind of goals do you have and what kind of a vision do you have for the future? It seems like you're working towards something.
Yeah, yeah. We will we'll probably stay in the real estate game. I really like the side of real estate that we're in that you can put some business acumen to it. You can kind of set yourself apart from the competition and do something a little different to get a premium price per square foot if you want to put it in real estate terms. And I don't know if we'll actually do any more short-term rental to your point. There might be a city that we could do it, but the economics of getting there and running it
Yeah,
probably, don't work. And us being, here in Louisville, and this is where we live, and it works well. But get on a plane, spend a day or two getting there. It is not a passive game. So I would, any listener, I'd be really, really cautious about that as well. So we might start looking into some higher end flex space. Got a couple of friends that are doing that in different cities, and listening to them the business acumen that they're applying to it, and helping those smaller, newer, unsophisticated business owners grow their business and have a nice space to run it out of. Seems really interesting.
Yeah, I think it is interesting. I think that flex is having its moment right now.
Hmm.
I think there's certainly a place for that as an asset class, and I think you're absolutely right. Like the inability to scale what you're doing is what I suspect would happen. In fact, I
Yeah.
probably would have worried for you if you're like, oh, we're gonna have like 62 of these things in like every city, including Anchorage, Alaska. I'm like, oh God,
Yeah, yeah,
maybe you
yeah.
can do it.
Yeah.
But yeah, it's probably. I have a friend who had a similar product, I think, to what you have here in Savannah, Georgia. And it was great for a while, but he didn't live there. He lived in Boston. So it was the flights and the back and forth. And eventually the management kind of he got tired of it and he sold it. He exited. Ironically, that guy's doing pretty much all flex space now
Yeah.
and loving it. Yeah, he's
Yeah.
doing some scaled up deals. But yeah, in the interim, I mean, if I were in the basement and that was my office and I'm working there and you don't mind it, hey, great business model. Like, let's run this thing, right? But yeah,
Yeah.
I can see not wanting 10,
Yeah.
7 even.
It's just the scalability I don't think is there. It's so hands-on, which is fine. I mean, we're getting paid well for what we're doing currently. But I don't see it scaling, and the amount of capital required to build one of these, you know, unless you've got multiple family offices in your pocket that are super bullish about large scale Airbnbs, you're probably not going to be able to scale it nationwide. Um,
Yeah, it makes sense. What do you get any repeat booking yet? Is there any like people who come for the same week year after year and you can like inch up the rates on them over
yeah,
time?
yeah, we've got a couple of those guys. A couple church groups that come every year, corporate retreats, sales teams that bring customers in, and they just basically spend money and take them on the Bourbon Trail and have a great time. So we're getting more and more of those. Our Thanksgiving guest is actually a family that'll be their second time with us this year.
Yeah, it seems like the end game for one of these other vacation homes I have my eye on, Summertown in New Jersey, and I'm like, I don't know if, short season, egregious prices out there, but I really like going out there, and I'd like to stay for a month or 6 weeks before I head to Florida. Um, But some of the allure there is it is the same family who's coming, look, that's their week. The second week of July, they take their vacation. They're going to do that for 10 years. And it just seems like this great end goal where you have your property and it's like January and the same people who are there, like, it's 12-week season or something, maybe like 9 or 10 of those weeks, the same people. And they're booked like as soon as they're done that vacation, they like book for the following year. It's like,
Yeah, yeah,
there's
yeah,
just something to that, like repeat Nate, subscription revenue out of real
yeah.
estate at like the high end when you're dealing with these like group luxury rentals that we
Yeah.
have here.
Yeah,
Um,
we're trying to push more and more recurring revenue from past guests. But part of our business is milestone events. Let's hope you don't have two bachelor parties.
yeah, they're
Guys
not doing
don't
a
turn
second
50.
one.
Yeah, yeah. Guys don't turn 50 twice. So
Yeah,
it's
yeah,
that recurring thing for us is a little difficult, and we
yeah.
definitely need to work on it.
Yeah, it makes sense. What other things do you think are relevant that maybe I forgot to ask about?
I think we really hit all the main kind of real estate side investment points about this business, and how how the way we look at properties and buying them for the dirt and building them back up.
Nice, nice. Couple of quick questions here as we close and wrap up. Um, Book recommendations. So I'm interested to hear one or two books that you found impactful as you started on this like real estate journey? Because I'm expecting it to be different than a lot of the guests who showed up because your
Yeah.
path is.
Yeah. I would say, let me give you probably three
All
that
right,
have been
fair
the
enough.
most impactful for this business. Gino Wickman's Traction, that one's amazing. Um, Franklin Covey's Four Disciplines of Execution about leading measures. And then Ellie Goldratt's The Goal, for kind of looking at this as a cash manufacturing machine and sending cleaners through here efficiently to get the place cleaned quickly and turned back over.
Sweet. They are some interesting ones. Two out of the three have not heard of or considered before. So
Which
that's
two are those?
Covey and Gold Rats.
Okay. Okay.
Yep. Traction's making its rounds. We hear a lot of that. A lot of
Yeah.
us has gotten a lot of value out of Traction, 100%, worthwhile. But yeah, the other two are interesting. I have to get those ordered.
Yeah, those are
Um,
good.
where do you want listeners to go? I know we mentioned a couple websites early in the show, but where should listeners go if they want to get more information?
Yeah, if they want to get more information about staying with us, superstaysstr.com. Love to help you plan your Bourbon Trail trip, corporate retreat, bachelor party, 50th birthday party. And then if you want to follow the renovation down there at A12 from the office to boutique hotel, probably over the next 8 months to a year is what it's going to take us. You can follow me on all of socials at I am Andrew Llewellyn.
All right, cool. My final question I ask all the guests, what is the kindest thing anyone has done for you, Andrew?
Taking the time to have a conversation with me and let me ask questions and not told me you're asking too many questions and be quiet. Mentorship.
Nice, nice. Ditto. All
Yeah.
right, I have a couple pages of notes. Great topic, cool business model. Appreciate your time today, Andrew, coming on the show.
Thanks for having me on, Dan. Loved it.
Thank you for listening to this episode of the REI Diamonds Show with Dan Breslin. To receive email notifications of new weekly episodes, sign up at www.reidiamonds.com.